The only thing that works with crypto and high leverage is for the guy that invited you into some trading scheme with high referral rewards, because when you lose money, they make money. So let's talk about it, what actually works and what doesn't work, what's the real advice, and how do you actually make it trading. I'm just gonna start off by saying that there are many ways to make it trading, but I'm gonna show my way, how I do it consistently to make money over time. I've developed my own strategy, and at the beginning of the year, I started trading with $100 in this challenge. And it's now up to $1,469, meaning we have done a 14x in just about 100 days, which is absolutely insane. I'm gonna go through the entire strategy and just how I've done this. The most impressive trades out of all these trades have been the ton and MNT or mantle trade. I'm gonna show you them right here. One of the trades we did over 100% in gains, and this just goes to show the actual amount of trades that you will have to do over time to be successful. So 14x every 100 days is probably not what it's gonna do. It's probably gonna do something around 3x over time. That's what I'm expecting it to do, especially as I go higher in the numbers and I chicken out a bit more on the trades. Trading with some $100 or $1,000 doesn't really affect me that much, but if I were to trade with 10k or well 100k, then I would be more invested in the trade, and probably when I did get some profit, I'd pull it out faster just to secure the money. So some interesting things that I'm doing here is that I'm tracking it all here on Twitter. You can see basically all the trades. They go on and on and on. Some trades fail, some trades do really well, but overall the last 100 days, it has given me a 14x. Some weeks are really bad, some weeks are a lot better. That's just what trading is. You place a bet and you bet for it to go your way. And when you get good at doing that, looking at the market, deciding the trend and taking the good positions, that's when you can grow the win rate over time and reduce it from gambling into a solid strategy. Leverage is really, really important, using the right amount. I brought the Bitcoin graph into Photoshop to prove a point on the amount of leverage that you will be using when trading. This is my strategy. You can do whatever you want, but don't cry if you end up losing all of your money. Let's say you're sitting right around here, Bitcoin just pumped a little bit, and you wanted to enter a trade. You used a trend trading indicator like I'm using, and it flipped green, notifying you that now you can finally enter the market into a long position. Before here, we shorted, made some gains, and now we want to enter a long position here and ride the new uptrend. You're ballsy on your trade, you feel like it's gonna break out here and just go straight up and break through the next resistance level. And that's a very good bet, because that's actually what happened. But here is the key thing. If you put in a long position here with 10x leverage, and then due to the volatility of crypto, it's probably gonna do that every single time you place a bet. The only time where I will put in a trade like this and cancel it is if the trend changes. The trend did not change, but the volatility struck the market really, really hard. It was denied of exiting here, and therefore we got some volatility. What this means is that if you put in a long position right here with 10x leverage and then it dipped, you would have been liquidated. You would have lost your money even if you did the right thing. You looked at the chart, it entered an uptrend, then you placed your bet that it was gonna break through, and it broke through just a little bit later. But you still got liquidated because you played with fire. It's just not gonna work. So instead, we place our bet 2x leverage. It dips. We feel it inside that it dipped. It's not a good time. Shit, is it gonna change trend? We could lose a little bit of money here. But then it just straight up pumped and broke out. Never during all of this did it break the trend. It kept to the uptrend. So over time, when using this strategy, I just feel completely relaxed to the volatility because I don't play with too much leverage. And I'm looking at the trend. If this trend were to reverse and we would go into a downtrend, I would cancel the trade, probably at a very small loss, like 0.1% or similar. So if you would have played with higher leverage, you would have lost a lot more money. Sure, if you placed the trade right here and rode it up, you would have made more money, but how are you supposed to know to place the trade here or here? You cannot predict that, so that is gambling. That is not a solid strategy, and you will end up losing all of your money. doing it that way. Right, moving on, very important here. Where do I place my stop losses? That is a question I also get a lot. Basically, if I put in a trade around here, a long position, I'm gonna put in a stop loss right around here below the support line. If a lot of volatility happens, it's gonna crash down, but we don't actually want our stop loss to be triggered. That's the key thing. We want to be in charge of our trades to cash out at the optimal time, or well, cancel the trade at the optimal time. The reason why we still use a stop loss and all the way down here, if something crazy happens in the world and the market crashes, the stop loss will catch us. But that is not the point of the stop loss. The point of the stop loss is to protect us against that, but not to cash us out of the trade. We will do that manually when the trade changes. As you can see, some volatility goes a little bit below like here, so therefore I always leave a little bit of breathing room. When we shorted the market all the way up here, I would probably put the stop loss, like I would find the next resistance or support level. Now it's very interesting because it's actually right here, and this would be all-time highs for Bitcoin, meaning we can't really predict it, but I'd probably put it right around up here. Let's look at some good trades. We got ton right here. We predicted it perfectly, put in a long position right here, rode it all the way up, and we just cashed it out. Manta, we did the same thing, entered a long position right here, rode it all the way up. Now the trend changed into a downtrend right here, so I cashed out. I didn't buy again because I was busy with other trades. We could have made a little bit more money, but I was doing other trades like the ton trade right here that actually made a lot more money. Just to prove a point, I have another video where we simulate 1,000 traders doing 1,000 trades each. Basically, we simulate 1,000,000 trades and count out the mathematics on those trades to figure out the optimal amount of leverage. So over to the left here, we got win rate. Over to the right here, we got leverage. If I draw a graph here, it's going to be very, very interesting because this is what the math showed us. With no leverage in the beginning here, you have the highest win rate you can possibly have because your stop loss is going to be triggered the least amount of times. And whenever you want to exit a trade, due to the trend changing, you lose the least amount of money. And over time, you will have the best win rate and make the most amount of money. It's just that people are greedy. I'm even greedy myself. I want to make the most amount of money as fast as possible. But just going to 2x leverage, we step down a fair bit. This is what it looks like. It's not that you go 2x leverage and your win rate goes from, let's draw some actual numbers here. Let's say that this is 65% win rate up here, and you have like 55% win rate right here with 2x leverage. So it's a very big dip. And then as you increase, the win rate just simply does this. It just goes straight down. So as you increase the leverage, your win rate goes to 0 because the volatility is gonna get you. The crypto market is really volatile, but it's not the big trend lines and peaks that we see that's the volatility. It's the random volatility when trading. It's this random volatility here. You want to put in a trade and it just randomly spikes down a big amount. That's the volatility that's going to get you when you play with leverage. We don't want that. So since win rate is probably what's going to keep you afloat in the trading world, it's going to give you the most amount of money over time due to the compounding effect, win rate is going to matter a big deal. So how do I actually do it? I want to show my strategy, but I also want to let you know that you will be able to make your own strategy based on the way that you like to trade, based on the hours that you're asleep, based on the time frame you want to trade in. I usually trade in the 4-hour time frame. Any faster than that, you're going to be up competing against bots. I'd love to trade in the maybe 12-hour or sometimes even the 24-hour time frame, but it's more exciting to get up every day and do some 4-hour trades, so that's usually what I do. I started out by finding my most favorite tools. I have the support and resistance levels. I really love those, and I love the trend lines. As we can see, it's just working really, really well. We have Bitcoin trying to break out here. It bounced on the trend line again, and then broke out. It's just very, very functional. You can put out the lines before and the market is gonna follow them to some degree. I think it's very, very interesting. But I would not be able to do this without a trend indicator. The trend indicator basically takes the data on the graphs, the trading volume, it takes it all into account, and then it figures out if we're going into an uptrend or a downtrend. It's pretty obvious to see sometimes. You can see here it's about to dip. We went below the support level, so it's gonna dip. Right here we bounced on the support level and it's about to go up. So it's pretty obvious which way we're gonna go, but using the trend indicator, it just makes it a lot easier because it just shows me we are now in an uptrend. But this is just what it does. When we have upwards momentum, we get an uptrend. When we have downwards momentum, we get a downtrend. And there are many trend trading indicators out there. I have the Lawson line here as well. I think it's very, very good. It's just a little bit different from the one that we developed. We wanted ours to be a bit faster, but you can see some examples here where if we use the Lawson line indicator, we would have missed this short right here. But now we actually nailed the short perfectly. We would have pretty much failed at nailing this long here as well. It's just a little bit slower than the indicator that we have, and that's totally fine if your trading pace is slower. So I'm not hating on it, it's just a bit different, and we developed our own indicator in another way. To the point, if you're still here watching and you see the indicator, yes, you can use any trend trading indicator out there. Pick the one that you like, but I'm gonna go to the most important part of this entire video here, is you take your entire strategy and you put it into backtesting. That's what we gotta do. We take the strategy, we scroll back on the graph and we put the strategy to action. We scroll all the way back, we look at the strategy. Is it indicating what we need in order to follow all of the trends? If we look at the daily time frame, we can see here, yes, it works. We head back to the Bitcoin peaks of the 2020, 2021 peaks, and it indicated perfectly at the beginning of the bull run. It indicated perfectly to sell at the end of the bull run. We got another, for the double top here, we got another small little bull run. It indicated for that perfectly as well. And at the end of the bull run, it indicated perfectly once again. You need to do the backtesting. When we developed this in the beginning, it did not time it properly, so we have fine-tuned it over time to do it properly. As you can see, we're sort of in the middle of another bull run and we got a bit of a chicken out right here. That's what I used to call it. It's basically a fake out. It tells us to sell, we sell, but then we buy back in at basically the same price. It's just what happens. It is volatile. I'm using 3 tools for technical analysis: support, resistance levels, and the trend line and the indicator to notify me in what direction I'm gonna trade. I have more shit to say, but I'm getting tired of talking. I'll save that for another day. Thanks for watching. Good luck out in the market, and I'll see you guys next time. Peace.